Well, small steps lately are leading to steady gains in the stock market, and that means we're seeing levels not reached since before the days of the Great Recession. In fact, investors sent stocks barreling to their highest levels of the year on Thursday, and today another nice one. A move in the right direction for the Dow, up 46 points today, now sitting just 50 points from 13,000. Now, Mike Rogers is the president of 360 Financial. Thanks for joining us tonight.
Sure.
Mike, what's got investors so confident again now?
First of all, earnings have been good. So companies are announcing good earnings. Usually stock prices will follow earnings. So that's a big piece of what we have going on right now. That's been terrific as far as driving not only the Dow Jones on that chart that you just showed, but the other indices as well, like the Nasdaq, which is about 4,000 stocks. That's at the same level it was 12 years ago. So in other words, it's at a 12-year high compared to where it was back in 2000.
Yeah, I'm not someone who looks at their investments a lot, but I did out of curiosity pull it up today. Holy cow. I mean, where did this come from? But for someone who doesn't invest in the stock market or just doesn't have a lot of exposure there, what does this mean for them?
Well, it means exactly what you saw. Your statement went up, or at least what you saw online, so hopefully this holds up for an entire quarter, and then you have a nice quarterly statement that's going to be arriving sometime in March. So that's a positive. What it really means to investors and people that are saving in the 401k is we're finally seeing a little reprieve from some of the downdraft that we saw last summer. If you remember, I was on a couple times last summer. We talked about the markets going down. It was a tough August, and September and October we had a nice rally. So what it really means for the average 401k investor is we finally seen a little reprieve. It means kind of stayed the course. If you held onto your investments throughout the summer doldrums, this looks a lot like last year. And last year we started out strong, everything was good. So I would tell your viewers to evaluate where they're at, kind of stay the course, but really look at their portfolio, make sure they're allocated correctly.
But is this sustainable? I mean, what happens if gas prices really do hit upwards of $4.50 a gallon? What happens if Europe and the economic bailout collapses there? I mean, it seems to me there's just a lot of instability out there, not only in the U.S. market, but the world market.
There's always some instability. That's just the nature of investing. If everything was exactly guaranteed and safe, that would mean that you wouldn't get very good returns because everything would be safe. So what we're looking at really is a marketplace that has uncertainty. Gas prices going up to $4.50 a gallon is kind of like a tax on the consumer. Right now the consumer is spending. They're not spending robustly, but they're spending. So people are out there buying goods and services. If all of a sudden you had to pay $1 more per gallon for gas, you would have to take that money somewhere, and that means you might be doing a little less spending. So that could be bad for the overall economy and for the market.
Mike, let's bring this back around to those folks who just aren't in the stock market at all. Why is this important to them?
Okay, well, it's important because while they might not directly be in the stock market, I'm guessing that most of the viewers out there are in 401k plans or in pension plans. Okay, so they might say, I don't even invest in a 401k, but I've got a pension plan at work. Well, the pension plan is invested in the stock market. The 401k plans are invested in the stock market. So indirectly, most people nowadays are invested in the stock market.
It's just nice to see these stocks just rallying again and doing something for us.
Absolutely.
All right, Mike Rogers, president of 360 Financial. Thanks so much for joining us today, Mike.
Yeah, you're welcome.